Welcome back, my awesome people. This is part 2 to my previous episode on what you should buy in the next lockdown. And in today's episode, I will be highlighting the one sector you should be buying when the next lockdown happens, and that is Reits. If you do not know what a Reit is, it is a real estate investment trust that owns, operates, or finances income-generating real estate. Modeled after mutual funds, Reits pool the capital of numerous investors, and this makes it possible for individual investors to earn dividends from real estate investments without having to buy, manage, or finance any properties themselves. Properties in a REIT portfolio may include apartment complexes, data centers, healthcare facilities, hotels, infrastructure, office buildings, retail centers, self-storage, and warehouses, and the list goes on and on. In general, REITs specialize in a specific real estate sector. So make sure you do your own due diligence and know what sector of real estate that you are jumping into. Most new investors these days strictly focus on learning how to buy stocks, but real estate exposure is very important as well. And a real estate investment trust is an excellent way to make that happen. First, let's talk about earnings for REITs. Net income is pretty much meaningless in the REIT world. That's because every quarter a REIT's management must revalue the portfolio. And most of the time, the values of buildings don't change. So much of a REIT's income will then be paid back to shareholders. And for more strategies and tips on money, investing, and creating financial independence, follow me on Twitter at Jacob Rant and get bullish on that subscribe button for the YouTube algorithm and smash all the likes and bells to get all the updates on my fantastic investments, and comment below with what you think about these growing industries, because I do reply to every comment. And again, if you are watching this video and do not have a Wealthsimple trade account and you want $0 commission fees that won't eat into your profits, especially if you are buying penny stocks, then sign up with my Wealthsimple link down in the description box below. Now that we've gotten the basics of a REIT out of the way, let's take a closer look at two of the best Canadian REITs to buy in the next lockdown, as these are the kinds of companies that will provide a combination of solid distributions and some impressive capital gains as well over time. The first REIT is Dream Industrial REIT, ticker symbol DIR.UN. Industrial real estate is the hot sector right now. Everyone wants to own industrial properties that can benefit from the growth in e-commerce, and Dream Industrial might be the best combination of value and growth in the sector. The REIT started 2021 with 177 properties after selling some of its lower quality assets in 2019 and 2020. It used the proceeds from the sales of those assets to pay down debt. And going into 2021, it had debt to assets of around 30%. With such a low amount of debt, Dream Industrial had the capacity to make a lot of acquisitions, and it has. At the end of December, it owned 271 properties. Management has said they can make another $275 million worth of acquisitions while still keeping its debt to assets below 40%. Even after all of that growth, Dream Industrial is going to have one of the safest balance sheets among REITs. Not only has it grown by acquisition, it is also growing by increasing its rents. In the third quarter of fiscal 2020, the leases the REIT signed were 37% higher than the leases that expired. Because it has grown so much this year, it is tough to tell what Dream Industrial's financials will be going into 2022. The final thing that will contribute to its growth that hasn't been seen yet is how cheaply Dream Industrial can borrow money. Some of the acquisitions this year were in Germany and the Netherlands, which both diversified the portfolio, but also means that Dream Industrial can borrow money in Europe. European interest rates are much lower than in North America. So if you are looking for an industrial REIT to diversify your portfolio, then Dream Industrials is the company for you. But remember, do your own due diligence first. The second REIT that I am highlighting will be Plaza Retail REIT, ticker symbol PLZ.UN, and is one of the best positioned among retail REITs to benefit from the COVID-19 pandemic. Plaza predominantly owns shopping plazas and quick service restaurants, and the majority of them have grocery stores or pharmacies as anchor tenants. Over 90% of Plaza's rent comes from national tenants like Starbucks, Tim Hortons, Staples, Sport Chek, Sobeys, Dollarama, Canadian Tire, and many, many more, who have the strength to ride out this pandemic. Investors are underestimating how resilient Plaza tenants are. Not only are the REIT's current properties strong, but Plaza is working on a number of developments which will add to Plaza's growth for a number of years. Michael Zakuta, the CEO of Plaza, has said that the REIT is more about developing properties. Plaza takes underperforming properties and refreshes them. Some of its best deals are when it's buying shopping centers with large stores that are vacant. It then renovates the stores into multiple smaller spaces and then leases those at higher rents. Pretty good business model. If retailers start going out of business, it could give Plaza a lot of shopping centers to buy and fix up. The price of the REIT doesn't reflect all of that growth potential. The growth is going to make Plaza's already very safe distribution even safer. In 2020, the distribution was just 78% of its FFO. Management reinvests the excess cash flow in its developments as well as buying back its units when they are cheap. The combination of distribution, buybacks, and reinvestment makes Plaza Retail REIT one of the best REITs for income and unit price gains. So if you have been on the fence about retail stocks, why not consider Plaza Retail? As currently, it is weathering out the current storm that we are in. But remember, do your own due diligence. One of the fun things about Canada's top REITs is they're a diverse group of companies, and you'll find a little bit of everything on the Toronto Stock Exchange. Whether you're looking for retail, industrial, office, or residential REITs, it's got a bit of everything for all types of investors. And Canadian REITs have been traditionally known as yield plays. But these top picks go to show that significant capital gains are also possible if you choose the right one. So regardless of what REIT you decide to purchase in the next lockdown or maybe a market crash, make sure you do your own due diligence, because I am just a clown on YouTube. And again, if you are watching this video and do not have a Wealthsimple trade account and you want $0 commission fees that won't eat into your profits, especially if you're buying penny stocks, sign up with my Wealthsimple link down in the description box below, where you will get 3 free stocks just like Webull and the other platforms just for signing up. Link is below. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out the channel, and so you will get notified when I post my penny stocks, REITs, dividend, and speculative stocks from my portfolio and other investments I am currently buying or selling. I want everyone to have the opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all ride together on a journey of health, love, success. So until the next video, stay ranting.